please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. You're still watching Business Lunch on CNBC TV18. It's been a busy day of earnings. A lot of big earnings coming in, but the market has been largely quiet. In fact, not perturbed at all with any of the numbers that have come out. In terms of individual stocks, it's still your same list, but there are some new additions to the list. PNB has actually moved up to about 2% or so. And Manappuram Finance, that stock has been so many rumors doing the rounds over there. So Manappuram Finance is also up almost about 3%. Largely, it's a day of banking. So you have names like ICICI Bank, Yes Bank that are all moving up, and HDFC Bank right now has moved to the high point of trade. ITC has completely flattened out post its numbers because the numbers are largely in line with what the street was estimating. No surprises at all over there. And that stock, of course, right now is not doing anything at all. A couple of more stocks. Biocon definitely has to be one stock in focus as well. Through the day, Biocon has only been inching up higher because of that deal on the biosimilars business, and now sitting pretty with a 5.5% rally on Biocon. But let's also do a quick check on what's happening with some of the global indices, because we haven't done that in a bit. Most of the indices across the globe have been sitting with gains this afternoon. So markets like Shanghai are up almost about 0.5%. The Straits Index is also up about 0.5% or so. And the CAC and the Dow futures are absolutely flat right now, indicating perhaps a flat move that we might see in those markets later in the day. But the big cue to watch this evening will be Reliance. It reports its numbers later today. Naveen joins in to give us a quick preview of what to expect this quarter around. Naveen, expect it to be a good one?
A steady set of numbers is what we are expecting, Sonia, from RIL this time. But remember, Reliance Q3 FY18 is important from other perspective also, given the fact that the stock is at an all-time high and the crude is trading at $70 per barrel, which is up almost close to 60% in the last 1 year. Apart from this, if you remember, on December 1st itself, Mr. Mukesh Ambani had told that Jio is in the course of achieving profitability soon, before than the anticipated date. Now, talking about the numbers specifically for Q3, remember on the standalone basis, the most important number to watch will be the margins. In terms of the margins, we are expecting around 17.5%. This will be majorly led by the GRMs. Remember, we are expecting the GRMs to be around $11.6 per barrel versus $12 quarter on quarter. Apart from this, as per consolidated numbers, Kotak estimates a PAT of close to 8,700 crore rupees. Meanwhile, Morgan Stanley is expecting a PAT of close to 8,400 crore rupees. Now, breaking up into segments, remember, Petchem as well as refining. Refining, we already told we are expecting a gross refining margin of $11.6, but Petchem also over there, although the spreads, that is the product realizations, have been reducing, but the volume increase, that will be offsetting the overall cost, and the margins on the petchem side are expected to be stable. On the other hand, the upstream business is also expected to grow well, given the fact that the realizations for both gas as well as oil, that has been surging. Jio is expected to continue its profitability at the EBITDA level. Remember, in Q2, they had posted an EBITDA of 1,400 crore rupees, so that is expected to continue. In fact, better going ahead, given the fact that the IOC charges have been reducing. So overall, a steady set of numbers. Gross refining margins are the key numbers to watch out for, which is expected to come around the $11.6 per barrel. Back to you.
Okay, thanks for that. Those are Kansai and Nerolac numbers. The revenue growth looks pretty good, 13.5%. And the management says that the company has witnessed a double-digit growth in all their segments in this quarter, led by the decorative segment. But I think what the street doesn't like is the fact that perhaps the EBITDA growth has been subpar. Just a 4.5% growth is what they've seen in their EBITDA performance. The stock is tanking now. But we'll get more details on that. We've completely run out of time on Business Lunch. Thanks for tuning in.